They told you the markets were stable. They told you inflation was under control. They told you precious metals were just a relic of the past, something your grandfather worried about but had no place in the modern digital economy. But while you were scrolling through your feeds and checking your stock portfolio, something catastrophic has been happening in the shadows of the global financial system. Something that could change everything you thought you knew about money, wealth, and security. And we are witnessing the beginning of what could be the most dramatic wealth transfer event of our lifetime. If you want to understand what's really happening behind the curtain while the mainstream media feeds you distractions, you need to hit that subscribe button right now and turn on notifications. We are tracking a developing crisis that could reshape the entire precious metals landscape forever. Here's what nobody is telling you. While everyone was focused on cryptocurrency corrections and stock market volatility, a silent earthquake has been building in the physical metals market. We're not talking about paper contracts or digital promises. We're talking about real, tangible assets that you can hold in your hands. And those assets are disappearing at a rate that defies everything economists thought they understood about supply and demand. The numbers we're seeing right now should terrify anyone who thinks they understand how markets work. Global inventories have hit levels that haven't been seen in over 2 decades. Major dealers are reporting shortages that they're calling unprecedented. Premiums are spiking to heights that would have been considered impossible just 6 months ago. And yet, if you turn on any financial news channel, you'll hear nothing but crickets about this developing crisis. But here's where it gets really interesting. This isn't just about one metal or one market. We're seeing a convergence of factors that's creating a perfect storm unlike anything in recorded history. Industrial demand has reached levels that are mathematically unsustainable. Central banks around the world are quietly hoarding physical assets while publicly promoting digital alternatives, and the general public remains completely unaware of what's brewing beneath the surface. What I'm about to show you in this investigation will challenge everything you've been told about precious metals, inflation, and the stability of our monetary system. We've obtained data from multiple sources that paint a picture so alarming, it's hard to believe it's real. But the evidence is undeniable and the implications are staggering. Over the next several episodes, we're going to dive deep into the mechanics of what's happening. We'll examine the industrial consumption patterns that are creating an invisible vacuum in the market. We'll look at the geopolitical forces that are reshaping global supply chains. We'll analyze the central bank policies that are quietly driving unprecedented demand. And we'll show you exactly why the price movements we're seeing now are just the beginning of something much larger. But first, let me give you a preview of what we've uncovered. The physical market has fundamentally decoupled from the paper market in ways that most people don't understand. While futures contracts and exchange-traded funds show one price, the real-world price for actual physical delivery tells a completely different story. This disconnect has created arbitrage opportunities that should theoretically be impossible in an efficient market. The industrial sector is consuming physical metals at rates that are stripping inventory faster than mines can produce new supply. Solar panel manufacturing, electric vehicle production, and advanced electronics are creating demand patterns that were never factored into traditional economic models. And this demand isn't price-sensitive. These industries need the physical material regardless of cost, creating an inelastic demand curve that breaks conventional wisdom about market dynamics. Meanwhile, central banks and sovereign wealth funds are quietly accumulating physical assets while publicly promoting the benefits of digital currencies and cashless societies. This coordinated behavior suggests they know something about future monetary policy that they're not sharing with the public. The contradiction between their words and their actions tells a story that should concern every investor. What we're witnessing isn't just a market correction or a temporary supply disruption. We're seeing the early stages of a fundamental restructuring of how physical assets are valued and distributed globally. The old rules don't apply anymore, and most investors are completely unprepared for what's coming next. The evidence we've gathered points to a convergence that's happening right now, in real time, that most analysts are either missing or deliberately ignoring. Let me walk you through the data that's keeping industry insiders awake at night. First, we need to understand the velocity of what's occurring. This isn't a gradual shift that's happening over months or years. We're talking about inventory depletion rates that are accelerating week by week. The latest reports from major distribution networks show physical availability dropping at rates that would have been considered statistically impossible under normal market conditions. When you map these depletion curves against historical patterns, the trajectory points to a complete availability crisis within a matter of weeks, not months. But here's what makes this situation truly unprecedented. The traditional price discovery mechanisms that have governed these markets for decades are breaking down in real time. Normally, when physical inventory gets tight, prices rise smoothly to balance supply and demand. What we're seeing instead is a complete disconnect, where paper prices remain artificially suppressed, while physical premiums explode to levels that suggest panic buying among those who understand what's really happening. The industrial consumption data tells an even more alarming story. Manufacturing sectors that depend on these materials are now operating on just-in-time inventory levels that leave zero margin for supply disruptions. Solar panel production facilities are reporting delivery delays that are pushing projects back by months. Electric vehicle manufacturers are quietly securing long-term supply contracts at prices that would shock consumers if they knew the real numbers. Advanced electronics companies are stockpiling materials like they're preparing for a siege. What's driving this industrial panic becomes clear when you examine the supply-side fundamentals. Primary production has been declining for 3 consecutive years, while recycling rates remain insufficient to fill the gap. New mining projects face regulatory hurdles and environmental challenges that make rapid capacity expansion virtually impossible. Meanwhile, existing facilities are dealing with ore grades that continue to deteriorate, making extraction more expensive and less efficient. The geopolitical dimension adds another layer of complexity that most market observers are completely overlooking. Resource nationalism is quietly reshaping global supply chains as countries begin hoarding critical materials for their own domestic industries. Export restrictions are being implemented under various pretexts, but the net effect is a dramatic reduction in material available for international trade. This isn't happening through dramatic announcements or trade wars. It's happening through subtle policy changes and bureaucratic delays that fly under the radar of mainstream media coverage. Central bank behavior provides perhaps the most telling indicator of what's really happening behind the scenes. While publicly promoting digital currencies and cashless payment systems, these same institutions are quietly accumulating physical assets at rates that suggest they're preparing for monetary system instability. The contradiction between their public messaging and their actual purchasing behavior reveals a level of concern that should alarm anyone paying attention. The mathematical reality is becoming impossible to ignore. Current consumption rates are stripping global inventories at a pace that cannot be sustained. Production capacity cannot be scaled quickly enough to meet demand. Recycling infrastructure remains inadequate to close the supply gap. These aren't opinions or projections. These are hard numbers that paint a picture of impending scarcity that could trigger price movements unlike anything seen in modern financial markets. What makes this situation particularly dangerous is the interconnected nature of modern supply chains. When one critical material becomes scarce, it creates cascading effects throughout multiple industries. Manufacturing facilities don't just slow down, they shut down completely. Technology companies don't just raise prices, they halt production of entire product lines. The ripple effects extend far beyond the commodities markets into sectors that most investors would never connect to physical resource availability. The smart money has already begun positioning for what's coming. Institutional investors who understand these dynamics are quietly accumulating physical assets, while the general public remains focused on digital markets and paper investments. Family offices and sovereign wealth funds are treating this as a generational opportunity to secure real assets before the broader market wakes up to the reality of the situation. The window for preparation is closing faster than most people realize. We are not talking about a distant future scenario or a theoretical possibility. We are talking about a crisis that is unfolding right now, in real time, while the majority of investors remain completely oblivious to what's happening. The convergence of industrial demand, supply chain breakdown, central bank accumulation, and geopolitical resource hoarding has created a situation that has never existed in modern financial history. When this powder keg finally explodes, the price movements we see will make previous market events look like minor fluctuations. The question isn't whether this crisis will happen. The question is whether you'll be positioned on the right side of the greatest wealth transfer event of our generation. While others are chasing digital promises and paper profits, those who understand what's really happening are securing real, tangible assets that cannot be printed, manipulated, or digitized out of existence. If this investigation opened your eyes to what's really happening behind the financial curtain, hit that like button and share this video with someone who needs to see this data. Subscribe and turn on notifications, because we'll be tracking every development as this crisis unfolds. The mainstream media won't tell you this story. until it's too late to act on it. Don't be caught unprepared when the dam finally breaks.